Welcome into Phil's Tax Hacks and Other Retirement Facts with CPA and personal financial specialist Phil Putney. Now let's get rolling with today's show. Welcome into Phil's Tax Hacks and Other Retirement Facts with Phil Putney and myself, here to talk investing, finance, retirement, and the other half of our top 10 Social Security myths. We're going to pick up the second 5 this go around. And we covered the first big one. The first 5 are kind of the biggies, I think, Phil.
Yeah.
These next 5 are maybe a little less known, but there's some interesting stuff in here as well. So wanted to break these down as well. How you doing this week? You doing all right?
Doing good. Really good.
Yeah.
Yeah.
Always good to talk with you. Always good to learn something new. And I think there's some interesting stuff, again, with Social Security myths. Like we shared before, there's usually like a nugget. There's like a piece that's kind of factual, but then it gets distorted, and that kind of creates the non-factual part of the myth, if you will, right?
Yeah, and that's the way it is with a lot of things. Is
probably
there's
all
the
myth.
Fact, but then there's the interpretation, if you want to call it, or the know, how somebody envisions or stretches that fact out to. Yeah. I don't want to say play a narrative, but I mean, at the end of the day, that's really what it comes down to.
I mean,
this is how they're trying to present it. So,
I mean, Bigfoot was probably just a big bear that was walking on his back leg, right?
That's right.
And it got distorted into some walking, mammoth thing. But anyway, so let's jump in and take the next 5 here and get going.
Sure.
Myth number 6 on our total 10 here is you can't work and receive Social Security benefits at the same time. I think this one is because of the early retirement age.
Right.
It creates limits, but as far as like you just can't do it, that's not correct.
Yeah, absolutely. So I mean, again, earliest you can retire is 62. The one exception to that is 60, and that's if you're getting survivor benefits.
Okay.
But anytime you file prior to your full retirement age, so somewhere between 66 and 67, if you plan on working, there's a limit, right? There's a threshold. Mm-hmm. If you earn above that threshold, then you're going to end up losing a portion of the benefit. It's around $20,000 a year.
I think it's like 21 something.
Yeah, this year it went up a little bit more. It's like 21 something for this year.
Yeah.
So if you earn more than that, for every $2 over the threshold, you lose $1 of the benefit. So yes, there's some truth in that. It's not that you can't work; it's that if you do work and earn above certain thresholds, you may not get the full benefit.
Yeah, it's like part-time. Many retirees do that. You retire early. Maybe you do need to turn it on. Maybe the strategy worked to go at 62, but you're bored and maybe want a little extra income, so you work, but you just can only work and make so much money. My brother's considering doing this very same thing. So.
Right. Yeah, and there's nothing wrong with that. To me, the fact here is just understanding that scenario and how it works, because you don't want to get into retirement and think, okay, I've got Social Security, I'm filing early for that.
Right.
I'm going to work and earn $30,000 a year, and you start to put your income plan together, and then you realize, well, wait a minute, I earned more than that threshold. Now I'm going to lose part of the Social Security benefit, and now you don't have the income you needed, so you think you have to work more, which causes you to lose more of the Social Security.
Yep.
Just understand the relationship, have that built out ahead of time. So,
but Phil, once you get to full retirement age, though, sky's the limit, right?
Yeah. Once you reach full retirement age, there is no limit. You can earn, whatever you want. In fact,
$1 million.
In that year of full retirement, the year you turn full retirement, then the threshold goes up dramatically. It's over $52,000 a year.
And that's earn. Just like that 1 year, right?
Right. It's just that 1 year. So, and the other thing to consider too is that the earning limits, both of these that we're talking about, those only apply after you file for Social Security. So even let's say you were filing for Social Security July 1st this year, what happened January 1st to June 30th doesn't make any difference. It's irrelevant.
Oh, okay.
It's only on the date of filing after, or the date you receive your benefit becomes effective after, that it matters.
Nice.
So.
Little tax hack there for you, so to speak.
Yeah, and then one other point too with this is, you do lose the current benefit, but that isn't lost forever, because what ends up happening is, make it easy. Let's say you filed at 62, ended up getting a job offer, went back to work, losing half of your benefit. Once you reach full retirement age, at that point, they're going to recalculate the filing date basically. And let's say you lost half of it, it's going to be as though you filed at 64, not 62.
Gotcha.
Because you didn't get the benefit. So that is a little, I don't want to say trick, but the fact of how it works, that, I lost the benefit, I don't get it currently, but that benefit isn't gone. So
nice. Okay. That's good to know for sure. Yeah. So there's a lot of, again, tons of little ways you can see where it kind of can get distorted, right? And then it creates these myths. So myth number 7, this is an interesting one. Social Security benefits are only for U.S. citizens. That seems like a no-brainer, but there are a few minor caveats.
Right. Yeah. I mean, it really comes down to, you have to be a resident, you have to be paying U.S. tax.
Right.
And have that work history.
You could be a non-citizen.
You could be a spouse, then you don't have to have that work history to get it. So you don't have to be a U.S. citizen to get it.
Right.
Which, I can understand to some extent if you've worked here, you paid in,
right,
or your spouse has paid in, then why should it be different for somebody in that scenario than not? But
right. And I think, obviously a lot of the immigration issues that we have going on can certainly lead to this one. And even maybe something like living abroad, can kind of create this as well. It's like, well, if you give up citizenship, then yes. I mean, I was, we were looking at, and we went to Aruba and had a good time, and we were like, we should move to Aruba. And I was like, I wonder if I can get Social Security. As long as you're still a U.S. citizen, yes. Right.
Yes.
But if you totally give up citizenship, then no. So,
yeah. So if you denounce your citizenship, then no, it's done. But if you have the work history in the U.S. and you're living here, you're a resident, then that's a whole other scenario.
But theoretically, one person again could be a non-citizen and a spouse could be, and then you have the spousal benefit. So
yes.
All right. Myth number 8.
Pretty narrow scenario.
Yeah, narrow scenario. Yeah. Pretty narrow there. Number 8. If you have a pension, you won't be eligible for Social Security. Now, obviously, in Michigan, there's tons still a lot of businesses with pensions. This one's a weird one. I don't think it precludes you, right? It could just alter your the funds, I suppose, the benefit options, I suppose, right?
Yeah, and it's not for all pensions. It's if you have what's called a non-covered pension. Basically, if you've worked for, and usually it's a governmental entity. Most common are going to be postal workers, police, fire workers, where the pension that they have is from a work history that they did not pay into Social Security on. So for that work history, if you have a pension, it has to be a substantial pension. There's this whole scenario you have to run through. But if you do have a substantial work history and pension from that work history,
right,
and you've got, think of it like a second career after that or before, it doesn't matter. You also have another work history for whoever that you've now paid into Social Security. So you have a Social Security benefit for that work history.
Gotcha.
If that's your scenario, you have these two sets of work histories. If you have a larger pension from that non-covered work history, it can reduce your Social Security benefit. I mean, I've got a fire chief had just that scenario, has a nice pension from the city of Detroit.
Right.
But also had a second work history where he does have a Social Security benefit from it. And unfortunately, because of the amount of his pension from the city of Detroit, it dramatically reduced his Social Security benefit.
Right.
I mean, it doesn't seem fair. I mean, you did have both these work histories, but it's just the rules and how it works. So Absolutely. And the big key there is it's not just a pension kind of across the board. It's very specific pension, a non-covered pension from that work history for a entity that you did not pay into Social Security on those wages. A
non-covered pension. All right.
Correct.
Good to know. Yep. All right. Myth number 9, Social Security benefits are based on your income and assets. I think this one, Phil, probably, I guess people get confused on this thinking that, I don't know, if you've got a $5 million house and I got $1 million house, does it somehow alter, and it's really, no, it's the salary, it's the earning years, which we're going to talk about in a second. But that's really what it's based off of, right? It's not based on your total assets.
Your assets, from a Social Security standpoint, doesn't come into play at all, or even income. I mean, you could be, if you've got a work history and based on that, you're a top earner, paid in the maximum Social Security benefit, you're collecting $4,000 a month.
Yeah.
That doesn't change and doesn't go down if you've got $1 million of investment income coming in too. It is what it is. You paid in the benefit, you're entitled to it.
It's not means tested.
It's not means tested.
At least
the benefit itself
anyway.
Isn't. Yeah, exactly.
That is one of the things that is right. That it is, and maybe that's where this myth is kind of getting started from as well. Is that's one of the things that's being considered as means testing.
Correct.
Because I mean, people could sit there and say, well, is Oprah ever going to need Social Security?
Right.
Probably not. Right.
Right. But I mean, the bottom line, they paid into it just like you or I. So are they not entitled to it? I mean, that's who knows. I mean, that gets into the fair and the equitable question, which is a whole other scenario to get into.
Right. For sure.
But I mean, right now they're not means tested. Yeah. I mean, it is what it is. You can have as much assets and income and get the full benefit.
Yeah.
Taxability, then you're going to be hitting that 85% taxability for sure, and it's going to be taxable. So I mean, it's that's kind of the means testing side of it, if anything.
But, just bearing that in mind, and that really leads into myth number 10, and that's our final one. And it's your Social Security benefits are based on the last job you had before you retired, and it's not. It's based over what, the 30 year or 35 years?
Top 35 years. Yeah, and this is where a lot of times people get Social Security and pensions kind of confused, because pensions very often are the top 3 or 10 or whatever it is, the most recent, or it's something like that. It's a smaller time frame. Very often it's tied to recency, right? The last 3 years of work or something of that nature.
Yeah.
Social Security doesn't work like that at all. It's the top 35 years.
Which is why it's so important, Phil, to go through and check. Go to ssa.gov, take a look. Yeah.
Understand your work history. Make sure it's right, especially if you're self-employed, because that net Schedule C income is what is part of your Social Security work history. So make sure that's right. They've got it recorded.
Yeah, even through COVID too, right? Think about people that were changing jobs or losing jobs or whatever. Make sure that stuff's been reported accurately, so that you can get the best. Because often we are in our higher earning years, the last years of our working life, but you still want to make sure that it's accurate. Because it's like probably the job you had when you were 16 at Wendy's has probably been kicked off the list, right?
Yeah, more than likely. Or that first job you got out of your career, your college career, the early work history, so to speak, is probably going to get eliminated.
Right.
But I mean, that being said, all that early work history, it all gets indexed for inflation to bring it up to a current value when they're figuring out the top 35.
Good.
So that's the first step they do, is index everything for inflation and bring it up to a current value. Then they just reorder it top to bottom and pick the top 35 years. So it's not recency of when it happened doesn't really matter. It's those top 35.
Gotcha. Okay.
But again, there's a lot of understanding to how this works, because number one, if you don't have 35 years, they're still dividing whatever that number is by 35.
Oh, interesting.
So if you only have 30 years of work history or 20, you had a great career, you're going to retire early. Well, they're still taking that work history that you have divided by 35 years. So it's going to dramatically change how that benefit works for you in that scenario.
And as a self-employed person, if you maybe were kind of paying yourself under the table or whatever and not doing Social Security payments for a while, that could certainly alter that.
Absolutely. Yeah. So there's a lot of factors that go into that, and understand how that work history calculates, how it plays into what the calculation of the benefit is, I should say.
Yeah, good information for sure. So again, this is the top 10 Social Security myths. There's a lot of them out there. Get good information. Go to ssa.gov. Make sure that you've created an account there. All that kind of stuff, because they don't even send out the little form as much anymore, right? You need to go.
You can download it online. You can get the most recent ones. So
and of course, have the conversations. But if you need help, talk to a professional, right? Talk to somebody who's got experience. And just about every financial advisor usually have somebody in their office that's really good at the Social Security aspect, right? And Phil, you and your team obviously do a great job with all these components as well. So if you need help, folks, as always, and you're not already working with Phil, reach out to him, have some questions about Social Security. Make sure you're getting these myths addressed so that you don't make a mistake and kind of go down the wrong path. You can call him at 248-888-7530. It's 248-888-7530 if you're listening to this. But if you're watching it on YouTube or something, the number's been on the screen the whole time. You can subscribe to us on Apple or Google or Spotify or YouTube. You can find it all at philstaxhacks.com. That's philstaxhacks.com. And we're here every week. We do a podcast every week and talk about various different subjects. So hopefully you find a useful nugget or two of information in there. Phil, buddy, thanks as always, man.
All right. Have a great week.
I appreciate you breaking these down, and we'll be back next week with more Phil's Tax Hacks and other retirement facts.
Investment advisory services offered through AFS Wealth Management. The content of this program is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. Investments and/or investment strategies involve risk, including the possible loss of principal. There is no assurance that any investment strategy will achieve its objectives.